The International Monetary Fund this morning out with a new forecast for global growth in 2021, looking for 6% growth this year, 4.4% growth next year. At the same time, the IMF is looking back at 2020 and saying the unprecedented fiscal measures the governments took around the globe added 6% to GDP. So in other words, the global slowdown would have been much worse had it not been for those measures. Gita Gopinath is joining us now. She is the IMF chief economist. Our Brian Cheung is with us as well. Gita, it's always good to see you on the day when you guys come out with this report, which is always so interesting. As you think about this year now and that 6% forecast, and also combine that with the knowledge that we have from last year, how much of the 6% growth this year is factoring in continued stimulus, and how much of it is sort of underlying recovery and growth?
Hi, it's always a pleasure to join you guys. We have a 0.5 percentage point upgrade for growth in this year compared to our January forecast. And of that 0.5%, I would say 50% of that, which is like 0.25 percentage points, comes from the U.S. Stimulus that happened, the 1.9 trillion American Rescue Plan. So that's a big part of the change. The remaining 25% basically reflects that the world economy continues to adapt to living with the pandemic and kind of working remotely and so on. So it has surprised on the upside in many countries. So I would say these are two of the big factors for the upgrade this time.
Good morning, Gita. Brian Cheung here. So I want to ask then about the next steps. It seems like in the United States, there's been a change in the focus after passing that 1.9 trillion to some sort of infrastructure bill. Should the fiscal spending in the United States and in other countries continue through the recovery, or is there fiscal space not there given the unprecedented amount of spending already so far?
So the way we look at it, Brian, is to keep in mind that we are seeing a multi-speed recovery. So what countries need to do really depends upon where they are in the recovery cycle. To your specific question about the US, yes, considerable support has been provided. The US is the only large economy that's expected to have higher GDP in 2022 than it would have had in the absence of the pandemic. So it is doing really quite well. Now, in terms of infrastructure spending, of course, that raises potential output and builds back more resilient economies, greener economies. And that's, of course, an investment that is still needed by countries. And this package serves that purpose in terms of addressing climate mitigation, improving roads and bridges, all of which raise productivity and have a positive effect on the economy.
And then the question, too, about just the issues around spending are kind of highlighted by the discussion from Treasury Secretary Janet Yellen yesterday, where she was calling on international coordination on some sort of maybe global minimum corporate tax. And now, on one hand, governments have to raise revenue to be able to support their spending. But then on the other hand, it seems like there is this need for some sort of coordination so that everyone's on the same level playing field. What's the IMF's position on the types of approach that the Treasury Secretary is taking to that level of international coordination, and what should that mean for global policy going forward?
We have actually been calling for a long time to have a global minimum corporate tax. And the reason is because otherwise we see a lot of tax shifting, tax avoidance, money going to tax havens, and that reduces the revenues that governments collect to do the needed social and economic spending. So, we are very much in support of having this kind of a global minimum corporate tax.
And where do you guys come out, Gita, in terms of this sort of spending versus paying for it debate that's been intertwined with the tax debate as well? Do you guys have a position on the need to pay for all of this spending that's going on, not just in the US, but around the world?
Well, again, it's going to depend on the country's specific circumstances. Some countries have more capacity to increase their debt and still have to pay only low interest rates, while others don't. But that said, I think it's a perfectly good idea for all countries to have a medium-term fiscal framework where, as they're increasing expenditure, they also have sources of revenues for it. And the reason is because this is not going to be the last crisis. If you look back a decade in the global financial crisis, debt went up considerably. and then we got hit by this one. So you really have to plan for the future too, regardless of how much of space you think you have. It is a smart, I think, to kind of build up buffers eventually.
And Gita, we've been talking about this for the past few World Economic Outlooks, but when you look at the upgrades that the IMF made across the board, the upgrades were more large for the advanced economies than they were for the emerging market and developing economies. So even this late into the pandemic, we're still seeing that disparate impact. What is the result of that? And what are the importance of policies like COVAX, which is trying to emphasize vaccine distribution in those emerging low-income countries, and also special drawing rights to try to get more funds to the countries that really need it during this time? What would be the consequence of not doing that?
I think this is the big message of this meetings and our outlook, which is that while overall the global economy seems to be coming back somewhat stronger than we had expected, divergences are growing across different parts of the world. And indeed, while we have upgrades for almost all income groups, low-income countries are the one income group for which we actually have a downgrade of negative 0.8 percentage points. So this is a big problem because these countries are already starting at lower per capita incomes. They're getting hit harder. The per capita losses are much larger relative to pre-pandemic trends. We're seeing 95 million have estimated to have become extremely poor in 2020. So we're seeing reversing all the gains. And that's not good for global peace. It's not good for global cohesion. And these countries, first and foremost, need vaccines. They're not getting it. They're not expected to get it until even 2023 for many countries, so at the current pace. So we need a global effort for vaccinations. They will need concessional aid. They will need grants. Many of them entered this crisis with very high levels of debt already. Some of them will require debt forgiveness. So I think multiple instruments will be needed to prevent, I think, what is really a troubling feature that after a couple of decades of income groups kind of converging, we're actually beginning to see a divergence, at least for some time.
Yeah, Gita, this has been a theme that we've talked about in the US specifically, but certainly it applies on the international stage as well. You talked about some of the different measures that potentially could be taken to help close that gap. How are you viewing, what level of international willingness is there to attack that problem? Because we have seen seemingly something of a rise of what some people are calling, for just to give one example of it, vaccine nationalism, right? Where certain nations are not necessarily exporting as much vaccine. So are you feeling on balance optimistic or pessimistic that the right measures will be taken to close that gap?
So it is a concern. I mean, we're seeing vaccine nationalism everywhere, either explicitly or implicitly. The reason I stay optimistic is because I believe that going forward, we're going to see a big ramp up in supply of vaccines. And so that will solve the problem to some extent. But again, it's not going to happen automatically. Countries will have to work together to make sure that this promised production that's supposed to come up actually comes through. It's a pretty heroic thing the vaccine industry is doing, trying to produce 9 billion doses of COVID vaccine in addition to the 5 billion for other kinds of vaccines. And it's not surprising they run into supply constraints. So governments, companies, everybody will have to work together. The second aspect, of course, is that many countries, the rich world has pre-purchased many multiples of what they will ever need in terms of doses. So we need a mechanism to transfer those doses very quickly. Again, I'm optimistic because I think supply is coming up. We are ramping up production. So I think we might be in a better place in terms of being more generous for the world as a whole.
And Gita, on that point, I want to ask about what downside risk there might be despite that vaccine rollout. One issue are the variants across many different corners of the world. What type of downside risk do you see? The IMF World Economic Outlook did note that the uncertainty still remains elevated.
I think the big one still is the pandemic and the virus variants. And if you look at cases now around the world, it is still very troubling. I mean, we see light at the end because we believe the vaccines will be effective against the strains that are coming up, but that is not guaranteed, which is why we should remember that we have very little time to vaccinate the world, and we have to really get to it as soon as possible to prevent many more of these variants coming up.
And then I want to switch lastly to that issue that we had brought up earlier about the special drawing rights. It seemed like there has been some commotion here, stateside at least, about the transparency around which countries will be getting the benefit if the allocation is increased by the $650 billion as the IMF has set its aspirations for. Just in terms of the measures that the IMF might be taking in terms of that and making sure that it really is going to the countries most in need, what does the IMF have to say about that?
So, Brian, first and foremost, getting an SDR allocation, which we hope will happen of about $650 billion, is firstly a big positive confidence building exercise also on the global front, on the multilateral front. And when we live in highly uncertain times, it is absolutely helpful for a large number of countries to have these additional reserves that they can rely on. So about $275 billion of that money goes to emerging market and developing economies. Now, low-income countries get about 21 billion. Now, that might look like a small number, but if you put it in the, in the context of their fiscal budgets, these are not trivial numbers. And again, more generally, it helps the world as a whole. Well, the other thing we're also working on, of course, is on voluntary, on lending or recycling of SDRs from the richer nations to the poorer nations, so that, again, you can get more resources to those who need it the most.
Gita, thank you so much for being here to discuss this report for us. Really interesting stuff in there. And thanks to our Brian Cheung as well. Gita Gopinath is the IMF chief economist. Appreciate your time.